Naval, great to have you join me today. I really do appreciate it. Had a chance to hear you speak it's actually been a couple months now at Founder Showcase, and I was really taken by your sort of humble self-confidence, interesting combination of, and a very effective way to communicate. So I appreciate you sharing some of your thoughts here with the readers of my blog.
Oh, thanks for having me. It's an honor.
I want to just sort of jump in with a little bit about two. I know you have a lot of irons in the fire. You've been a busy guy of late, but two of your more higher profile endeavors, that being AngelList, of course, and Venture Hacks. Why are those so important to the startup community? Sort of what is the value prop, and why should entrepreneurs be aware of them?
Well, as of the last 9 to 12 months, AngelList is actually my full-time endeavor, and
Okay.
everything else is just sort of an offshoot of that, and that's what I spend all my time on. And Venture Hacks was really educating entrepreneurs on the game theory of how to raise venture capital and eventually angel capital. And AngelList is a productization of that. These days, thanks to code and community, we can productize almost any process done by humans over and over. And what we're doing is we're helping productize the raising of capital for startups.
Right. Okay. Well, that's a nice segue, and I like that when entrepreneurs take a core idea and then make it extensible and build upon it, which you guys have clearly done. We Rincon Venture Partners, the firm I'm involved with, we've actually invested in a company from AngelList called The
Great.
Resumator, and
Hmm.
and just to give them a plug, they're kicking ass, by the way.
Great.
The
Glad to hear
C
it.
the CEO is just amazing. Don is a great guy, but germane to this conversation, we probably wouldn't have heard of the Resumator if it weren't for AngelList, because we're primarily a Southern California focused venture firm. We're early stage. We like to get involved, and so local makes sense. But we did see the Resumator on AngelList and made the investment. Is that an anomaly, having a Santa Barbara venture firm invest in a Pittsburgh-based startup, or are you seeing that to be, is that becoming more commonplace?
It's actually quite common. So, AngelList had really two histories. One history is we took Bay Area companies and accelerated their financing amongst Bay Area investors. So normally they would have met them one by one and perhaps met 5 or 10. We got them introduced to 30 to 50, and we got their rounds done quickly.
Hmm.
That's obviously value added, but it's not the core. The core business that we got built on was taking out of market startups and introducing them to investors.
Hmm.
So an example is around late last year, there were more high quality seed stage startups in New York than there was an angel community to support them. So we introduced a lot of great New York startups to Silicon Valley investors. And
Hmm.
then there are cases like yours where there are people who are out of the two core markets, and they're not in London or New York or San Francisco. Maybe they're just one tier off from that, which is Los Angeles or Seattle or Boston or Austin.
Right.
Or there are a lot of companies we've helped that are in Estonia or in Eastern Europe or in France or in as you mentioned, Philadelphia. We just had another company, maybe our second, that was funded out of the Vancouver area. One that was in Waterloo. One that was in Toronto.
Hmm.
So these are companies that have great companies, good traction, good people, but they're just not where the investors are. So they're forced with: do we move, or do we cast a broader net? And that's what AngelList allows them to do.
Right. Wow. Well, we've definitely seen it in practice, and so we're appreciative of it. So Venture Hacks, I know that was sort of the precursor, but Hacks and AngelList both are providing tremendous value, as attested to with our investment. What I hate to be crass, but what is your business model? Clearly, you're building tremendous value, and
Right.
I think you're giving back to the community. But is there a business model longer term behind it?
Well, as you know, the most important thing for an investor, especially sort of in these modern days, is access to deals.
Yep.
There are a lot of great companies out there, but when the great companies really hit, all the investors want in, and there isn't enough room. And Fred Wilson put it pretty well, which is you need to have a pre-existing relationship with the entrepreneur, or you have basically no shot of getting into the best deals.
Right.
And so one of the things that AngelList helps us do is raise our brand, have a pre-existing relationship with many, many entrepreneurs, and just give us access into great deals. So one simple business model is, for example, we could raise a small fund and just invest in the companies that we liked. And I don't think we would have to worry about as much about the access issue as someone who's not branded would have to.
Right. For sure.
So yeah, so that's a simple one. In reality, we're not concerned in the short term with making money. This to me, this is a 10-year project. very much like a venture fund is. Most venture funds are in 10-year vesting schedules. So this is a 10-year project, and we're 1.5 years in. We got a long ways to go, and it's actually a very cheap enterprise to run. It doesn't cost much. There's just a couple of us. It's all virtual. We don't do physical events. We don't do physical meetings,
Right.
and so we keep our costs low. And right now, it's just a thin introduction service. So we're just happy to do that for as long as we need to kind of build up the community. And then long term, we may start investing in some of these companies as they go through.
Great. Well, it reminds me of Jeff Bezos circa 95 or 96 when people were pounding on him to sell CDs and sell other things. Yeah. And he said, look, I'm in it for the long haul. As soon as I nail books, I'll figure out these other things. Right. So great.
Yeah, and even to the extent that we invest, we're not taking the incubator approach where we invest at some low price and then 10 weeks later it's a demo day and everybody else invests higher. We would invest on the same terms alongside the other investors, and we would make sure to be a very, very small piece of the round and not to crowd out anybody.
Perfect. I like that approach. So given that the market has evolved with AngelList and other and the sort of Techstars type communities that are out there, what changes would you make to your book, Pitching Hacks, if you were rewriting it today? Is there anything else you would either add or delete or otherwise modify?
Well, the whole environment has changed. The company that used to take $3 to $5 million to build a product for and get a little bit of traction now costs $300,000 or $500,000 for. So you can cast a much wider net. The nature of the pitch can be a lot simpler. You can get funded just an executive summary and a good conversation, or a series of them and whiteboard pitch rather than having to put together a business plan or even a deck. You can do it from much smaller players. You can get fully financed on a smaller amount of capital. So I think that the whole thing in some ways is obsolete unless the environment has changed. But in other ways it's not, because human psychology hasn't changed. And that is the great constant. So I think seed investors are really taking the role that Series A investors used to. And Series A investors who are smart are taking the role that Series B investors used to. I think that failure rate will go up, but that's okay because the total dollar volume of what's lost won't change that much because these are much cheaper companies. The leverage of the system has gone up. The prices have gone up partially because people are realizing these are really Series A's companies. There's a lot that has changed, but one of the reasons why I don't spend as much time updating Venture Hacks and Pitching Hacks anymore is because every time I come up with an observation or idea, I want to productize it in AngelList rather than do the text version in Venture Hacks. I'd rather do the code version in Ruby.
Well, and it's so much easier just to throw it out there in a blog entry as well, just get the thought out there. And this idea of, I think Fred Wilson has said that he may never write a book because his blog is his book. So that's another way of looking at it.
And Pitching Hacks was actually just a compilation of blog posts cleaned up, essentially.
For sure. So speaking of blog posts, about 18 months ago or so on your Startup Boy blog, you wrote a post entitled "Why You Need to Be in Silicon Valley." And I'm wondering, now that AngelList, et cetera, is making such an impact, do you still feel that a company eventually needs to gravitate to Silicon Valley, or has your thinking changed a bit?
It has changed. It hasn't changed as fast as I would like it to. I'd love it if great companies can stay where they're meant to be, raise financing, execute, and do well. But that being said, there are two very good reasons to still have a presence in Silicon Valley. One of those is just the incredible critical mass of early-stage investors. So it's still harder to raise money in other areas, and you have to show more traction. So, for example, Resumator would probably have had to show more traction in Philly than they would have had to show if they were based in Silicon Valley to raise money. The second is the second reason, of course, is just the incredible critical mass of business development people, partners, the whole ecosystem working together in Silicon Valley, the talent pool, and so on. Now, what's changed also is that it has gotten extremely hard to recruit in Silicon Valley, nearly impossible. Anyone who shuts down their engineering team in Philly and moves it to Silicon Valley is out of their mind, because they'll never be able to recruit the great people here without having massive resources and brand and traction. So what I advocate these days is a bit of a two-tier structure, which is that take one founder or one or two core management team members, make sure they either live in Silicon Valley or they spend a lot of time in Silicon Valley so they can build the investor and business development relationships they'll need, but keep the bulk of the company in the hometown where you can actually recruit people and scale without the distractions. So I think that's kind of the way to go at the moment. There will come a day when you'll be able to raise your money from early stage investors outside of Silicon Valley, but for that to happen, the capitalists themselves will have to move. one mistake I'd made early on is I thought capital is fungible. Look at the foreign exchange markets. Trillions of dollars flows around all day long from one end of the globe to the other. Well, capital is very mobile, but capitalists are not. And early stage investing is a people business. So until the capitalists themselves move, and they really don't because they're rich, they don't need to move.
Right.
Really what needs to happen is the homegrown capitalists have to come up, which is one of the reasons why I think Estonia is such a hotbed of activity for early stage startups, because you actually do have a lot of ex-Skype employees who are fairly wealthy there and who know how to build great products, and they're tastemakers. They know what good products look like. Mm-hmm. So there is an early stage angel community that's disproportionate to everything else going on in that society. Mm-hmm. So I think you have to have those kinds of local successes emerge, and they're happening more and more. Look what Groupon's going to do for Chicago. As I said, we're seeing some very good companies in Vancouver now. So there's going to be more and more of these early stage networks forming. And in that sense, Silicon Valley will not be weaker, but the rest of the world will be stronger. Volume of good quality startups.
Yeah, no, I agree. And I agree with your comment about the capitalists themselves. I'm a bit of a cynic, and I always felt like it was a little too self-serving for a venture capitalist to say, no, I think you should move it down the street from where I live because it's easier for me. They never say that part, but...
Yeah, and also there are a lot of people, I think, who are out of the core markets, people like yourselves or, even people in New York a year ago, and they want to have access to the best deals, and they're willing to get on a plane to do it, right? So I'm sure you guys get on airplanes to do due diligence. Silicon Valley venture capitalists, by and large, do not get on airplanes to do due diligence, although recently, given the rise in valuations and prices, some of them are finding it's worthwhile to get on airplanes.
Right.
But it's like in any industry, it's the newcomers who are going to make the extra effort. Mm-hmm. Google AdWords and AdSense was built on a whole brand new class of advertisers, not on Madison Avenue suddenly deciding to use Google AdSense. Right. So the same way, there's a whole new class of investors who are going to make these out-of-market companies successful. So we're seeing the rise of incubators in Silicon Valley, like 500 startups and hackers and founders who are essentially importing talent from all over the world. They're saying, we'll help you with a visa, you come on in and we'll get you acclimated in the local community. Mm-hmm. AngelList is opening doors for them. People like yourselves are investing outside of their geography. And that's a long-term trend. So over the course of 3, 5, 7, 10 years, it will break Silicon Valley's exclusive hold on great companies.
Mm-hmm. Curious as to, this was part of your talk that I actually had the pleasure of listening to. I'm curious as to what are the characteristics of companies that do not gain traction on AngelList? I'm sure it's like any product, it works for some folks and not for others.
Yeah, actually it doesn't. So the stats are not great in that sense. It doesn't work for the vast majority of folks. The vast majority of companies are either not financeable or not financeable on AngelList. Mm-hmm. And we try and be honest with them and tell them that up front when they show up. One is there's a whole set of companies that are not financeable by the venture or tech investment community. Right. And those would be service businesses, markets that are heavily, heavily played out. Like if you're building desktop software these days, you better have a really good reason. If you're fighting a war that's already been won, like you're going up against eBay, you better have some really core differentiation and traction. So there's a whole class of businesses that are just sort of either obsolete, that war's been won, or they're not tech, or they're services. Another common would be not enough technical people on the team. These are tech businesses, so if you're a very business-heavy team, that's frowned upon. If you're completely out of market, like we get some interesting companies once in a while from Florida, but there is almost no investor community in Florida. It really can't help you if you have no presence in any other place. Pre-launch companies tend not to work well unless you're a highly branded team, which can raise money on the virtue of the team, and you're pre-launch, then you just have an idea, and ideas are a dime a dozen. So definitely people are raising money in advance of execution. I think teams that have no credibility. Y Combinator has a really good test they use to say, what is the most impressive thing you've done in your life other than starting this company? And if the most impressive thing you've done is starting this company, then from an investor's perspective, you're a risky bet. Right. So I guess we look at the team, product, social proof, and traction. And at least one of those has to be exceptional for us to really feature you on AngelList and to be able to help you. But even outside of those, if you're in completely the wrong location, or you have absolutely no technology, or if you're just purely at the idea stage, or you're in a services business, I think those are essentially disqualifiers. Mm-hmm. It's not a disqualifier to say you're not going to build a great business someday. You might. It's just that right now you're not providing the evidence that it would take for someone to fund you.
Absolutely, yes.
Yeah, at the end of the day, I would say that the companies that fail the most to raise funding are the ones who use too many words and too few actions. And so your biography is a record of your past actions.
Mm-hmm.
Your execution on your current business is a record of your current actions. Talking about what you're going to do in the future is almost pointless.
Right.
Talking about what you can become are almost pointless. People want evidence.
Right.
There's a lot of talk out there.
Right. No, those are great words of wisdom. So hopefully folks listening to this that want to apply to AngelList will put that into practice. Naval, thanks again. I know you're super busy, and you were very gracious and kind and to slot this time in for me. So once again, I really do appreciate it.
Oh, not at all. I think what you're doing is great. It's great to see venture capitalists sort of innovating and adopting modern tools and providing service to the community. That's what you're doing. So I think it's fantastic.
Well,
definitely want to support it.
I appreciate that. Take care.